Back with us here on Halftime Report. Just before we went into the break, we were talking about extreme earnings reactions on the downside. But one such stock that is bucking the trend and is doing very well after its third quarter numbers is Jana Small Finance Bank. Now, the company also said in its earnings call that the worst of its asset quality issues are behind. Now, to discuss this and a lot more, we have Mr. Ajay Kanwal, who's joining in, who's the Managing Director and CEO of Jana Small Finance Bank. Mr. Kanwal, good afternoon. Thank you so much for joining in. And I start off with what you mentioned in your earnings call, which is about the asset quality issues being behind, now the worst of it being behind. Does that also mean that slippages will now see a reduction from here on, or will they continue to remain higher than the historical average?
So first, good afternoon. Thank you for having me on your show. We certainly would see the slippages coming down. But see, here is the important thing for all viewers to know about Jana Bank. 68% of our book as of December is a secured book, largely property backed. So fundamentally, even if there is small slippages on the secured side, it's a matter of time when you get your money, and it doesn't become an issue in terms of it causing a loss to the bank. Our challenge really on the asset quality was in the microfinance business, which is now at 32%, where we had seen stress in the industry, and which is where we saw elevated flow-throughs in the first two quarters. It's come down in the third quarter. I must also add that microfinance collection still continues to be a hard work, which will continue to focus.
All right, we take that point. But, you know, what was very interesting, apart from everything that you said, and I noticed this, is that you called it Jana Bank. And this, when the stock market calls it, and the name of the company is Jana Small Finance Bank. And that leads me to the question, are you looking to apply for a universal banking license? I mean, will this be Jana Bank instead of Jana Small Finance Bank?
So first, I've made sure that small finance is very visible behind me. So
yes, but when you said it, maybe it's a Freudian slip.
I'm hoping so, but listen, it'll be absolutely our full efforts to apply for a universal bank. You know the conditions which RBI has published. The one condition which we are doing our best to meet is to ensure that gross NPA and net NPA remain below 3 and 1% respectively. It does cause us to put additional provisioning because the year we are supposed to meet it has seen an MFI stress year. So it's a bit of a difficult moment, but touch wood, the business is doing well. We're able to provide for the accelerated provisioning, as we call it, to make sure that net NPA remains below 1. And we have been doing it for the last 3 quarters now.
So what are the other parameters that are left now, and how long before we hear that application going in?
So all of the parameters have been met. This one we have to meet for 2 years in a row. We met it last year. We meet it this year, then we are eligible to apply. As you know, it's not an automatic process, our eligibility, and then it's a decision for the regulator and the committee which has been appointed recently, which will decide whether Jana should get one or not. But we fundamentally are, in our minds, very clear that we will certainly apply for it.
So first quarter FY26, thereabouts?
That's right. So audited results in April, and then application by May.
Right. You know, Mr. Kanwal, you mentioned in your earlier answer that microfinance collections still continue to remain a challenge. For how long do you expect that to continue, sir? And what's the situation on ground right now that you are witnessing?
So for us, the challenge is very simple. Normally, you would hit 99% close to the 20th or 22nd of the month. Now we hit 98.5, 98.6 by the 30th of the month. So by which I meant that, yes, the book has stabilized, but hard work will continue. It's not, you know, like it was in the fourth quarter of last year, where doing 99% by 22nd of the month would have been like, okay, we are more or less sorted out. Here we are fighting to the last minute. And I think there has been some noise, obviously, within the industry, between employees, between various institutions. So it's not still back to the way it used to be. So I do think this will continue, which means hard work at our end till the last day of the month to get everything right. I suspect will at least be this quarter and possibly next quarter too.
All right. So, you know, we'll take it as a given that your ratios, the net NPA and gross NPA, will remain below 3% and 1% respectively, currently at these levels itself. I just have a two-part question. One is on your advances growth. What do you project for the end of this year and the next year as well? And the second part is on NIMs. And the reason why I ask you about NIMs is because they've reduced both year on year and quarter on quarter. And we've spoken to a lot of financial institutions, banks, etc. They are, seeing the turn of the rate cycle sometime in the next couple of quarters. If that were to happen, that would put further downward pressure on the NIMs. So what is your outlook here? Where do you believe that, the NIMs would sustain? What the base would be here?
So Mangalam, thank you. So first question, very important and very relevant. Our growth in secured book, which is affordable housing, micro lab, MSME, gold loans, that is about 29% for the year in the first 9 months. So we should finish in the 35+% growth for the year in secured book. Our unsecured book first 9 months has been -11%. Let's say we end up with -11% for the full year. Then the overall growth this year will be about 20% growth in assets. We had given a guidance earlier that we'll grow 20% assets and 20% deposits. So we'll meet that guidance for sure. Our bias is to give a similar guidance for the following year too. And which is what we said in the analyst call, that at least while we discuss ROAs and ROEs and PATs, we certainly are in our mind very confident that we will grow assets and liabilities at a 20% clip. But for us, 20% asset growth has to be more secured than unsecured. We have clearly said that we would like to reach 80% secured asset book. From a 0, we have reached 68 as of December. We would like to get to 80.
And by when do you expect to get to 80, sir?
I would give ourselves 2 years of hard work to get there. But touch wood, I mean, the book that we have built, which is very organic in nature, has seen a COVID test, gives us comfort to go towards 80 using the same books, small ups and downs by geographies or some small, small changes here and there will continue happening. On the unsecured side, Mangalam, we have started CGTMC and CGMFU. So while we are cautious and we are careful and we are not growing very fast, we have never grown very fast. I do want to take away any tail risk that may come out from any unforeseen moment also. And for that, while it will cost us, we certainly will put into CGTMC and CGMFU. We have started the first bunch, roughly about 1,200 odd crores out in my unsecured book. I've already put under the guarantee programs. Not to your NIM. Is it okay if I go to the NIM?
Yeah, please go ahead, sir.
So NIM, good news, it's 7.7%, 7.6, sorry. The only gap is from the 11% drop in unsecured book, which has got a higher NIM. Because that has dropped, 8 has become 7.6. And in fact, in our investor deck, we have shown that even if my book as of December in unsecured would be the same as March, forget growth, just identical, my NIM would have been 8%. So good news, one, the asset NIMs are holding up very well. Second, once we come back to a normalized moment in unsecured, we will go back up on NIMs. We'll also go back in cost income because cost income has got challenged because, some amount of revenue, obviously, which should have come, has not only not come, but some we have lost also because of unsecured. So I think cost income will get better. NIMs will get better. On cost of deposit, we are expecting that our cost of deposits will come down this quarter. And we have repriced both our savings account. We've repriced our deposits. And we do see that we will be reporting a few basis point drop in cost of deposit when we finish this quarter.
How are you managing to do that? Because all the other banks that we speak to, they have gone on to this deposit mobilization spree, right? So if competitors or other banks are offering better terms for deposits, you've managed to reduce your cost of deposits. How do you plan to maintain, the quantum of deposits at a lower cost at a time when competition for those funds is increasing?
See, one, I think, to be very honest, the size of the bank is not so large relative to the entire deposit, banking industry. So for us, the 20% growth is like, a 6 to 7,000 crore of growth of deposit in a year, which is a very nominal sum when you look at the entire size of the industry. Second, we are in the growth phase where, we really are opening up new branches. We're adding RMs. We have launched a few new segments, which were never there in the bank before. For banks who have been around for a long time and, they already have 1,000 branches, they open the next 20 is a small change. For us, when we open the 20 branches, it's like a big addition for us. Our segment launches are there, RMs are growing, new branches, We obviously have very good digital answers. We have good servicing capability, new RMs, we are more hungrier. I suspect that kind of foots the bill. Yeah. We did find Mangalam on the savings account side. There's a very high end of pricing where a lot of large savings account comes in and just demand a lot of price. We felt in this quarter that we should not cater to that kind of segment. While it does improve CASA, it kind of just puts you into a lazy habit, which would not be a great culture to carry on with, which we have kind of moved back from. But other than that, listen, uh, for our bank size, getting a few thousand crores every year with 778 branches across 24 states and 24,000 people, I wouldn't put that as a challenge we wouldn't be able to surmount.
Right. Final word from you, Mr. Kanwal, if you can just share a number on this, your cost to income ratio target for the next year.
Okay, I'll tell you what it should be when we become 80% secured. It should be a 52 or a 53%.
Okay, 52 or 53% over the next 2 years. So we will, assume that sort of glide path. Thank you so much for joining in. Congratulations on a good set of numbers. The street likes what you say. The street likes what you've delivered. The stock in a wobbly, weak market up around 17.5%. Wish you good luck for the remainder of this quarter and all of next year as well. And hopefully you will join us when you do apply for that universal banking license as well.